Regular Insight viewers recognize her right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about the importance of full financial planning. We've talked about it before, that holistic approach, not just doing part of it, but making sure that you include everything in that. And you know, it still is, even though January is almost over now, it still is the beginning of the year. How did that happen?
Add it to your 2021 list of things to do this year is make sure you get a financial plan put together. I think it's just important though that people understand there is a difference between financial planners and investment advisors. And I'm both. I have both, right? I do both of these things, but there's a lot of people that just do investment advising, meaning you give them your money and they put you into the stock market, in a portfolio of some sort, whether they manage the portfolio themselves or whether they pay someone else or they subscribe to a model of some sort. Investment people just literally look at the investments, you give them the money, they try to grow it, right? It's as black and white as that. We've seen definitely an influx or a change though, especially with younger advisors coming in going, hey, we understand that what we do with the investments and how we grow those investments ends up affecting a lot of other areas of people's lives. And so you used to, again, have the health insurance professional, and you had an attorney, and you had a CPA, and you had your investment person, and they were all separate people. Those people did not communicate. There was no planning going on between those people. And so each person did their own job, which is a good thing. But because there wasn't that that communication between those investment people and the attorneys and the accountants, people ended up seeing things like, let's call it IRMAA, right? So IRMAA, it's a funny little phrase. We joke around with my clients a lot. I'm like, you don't want to meet IRMAA. They're like, who's IRMAA? I'm like, well, she's a nasty little thing. But what she is she's an additional premium for Medicare if you make too much money. So if your financial person ends up creating a bunch of capital gains one year, those capital gains, even though, again, you're looking at from just the investment perspective of selling some positions off, ends up creating a health insurance issue where there's additional premium for Medicare. So a lot of people don't realize these correlations between the health insurance person who's saying, well, why did your financial person do this? And the financial person's going, hey, that's not my job to worry about the health insurance side or keeping you in a health insurance subsidy or what kind of additional taxes or tax brackets we may throw you into because that's the CPA side. So when you have those people compartmentalized too much, they're all going, hey, I'm just here to do my portion, right? And if my portion ends up creating an issue on someone else's portion, that's not my job. It's not my job to see those things.
Or would they even know?
Or would they even know? That's a good question. It's not always that they don't understand it. I mean, it's sometimes they didn't know what they didn't know because they've never dove into anything but their own category of expertise. So it's important, though, that you talk to people who look at it from a holistic perspective, because I'm telling you, everything we do from the investment side ends up affecting so many other areas of financial planning, causing someone to go into IRMAA, which maybe costs them an extra $300 a month for the next year of their life.
It's a lot.
Clients need to be aware of that. And could that have been shifted or changed if the investment professional understood how these things affect one another? Same thing with the taxes and the attorneys and the legal planning. These people communicating and putting plans together to where everyone is cohesive is really critical and can save people a lot of money in taxes and health insurance subsidies for their health insurance and not paying IRMAA, as well as growing the investments the right way with Roths and growing the money a certain way. So Roth money, we all know, is tax-free as you grow it. What kind of money do you want to be more aggressive? Well, probably the one that grows tax-free. What kind of money do you want to be more conservative strategically? Maybe the IRA that all grows taxable. Again, I see a lot of things not being strategy. There's no strategy to them. You'll see a client come in with a current investment person and they have it all invested the same way. Their brokerage money is invested like their IRA and it's invested like their Roth. They're all in moderate portfolios. And really, you can recreate that same design and keep someone moderate as an overall picture, but put the right kind of money more aggressive and the IRA money more conservative so that, again, you're growing the right kind of money to save someone long term. So everything you do and everything your investment person does affects several other areas when it comes to financial planning. So that holistic approach really becomes critical and helps to save money in the long run.
It makes sense to remember that it's not financial planning and retirement saving is not just about your investments and putting money in a retirement account. Well, if you want a full financial planner, all you have to do is give them a call at Foster Financial, 234-2200, and book that complimentary consultation today. We'll be right back.